Good morning, everyone, and happy Wednesday. It is time once again for weekly Profit Talk. We do this every single week at 8:30 a.m. Mountain Time, be that daylight or savings time. We go ahead and we adjust for the clocks. Eric here, and this week's topic is what every doctor needs to know about estimated tax payments. This topic is top of mind right now. For my own clients, we do business returns in February. And we do your 1040s in March so that we can do estimated tax payments in April. Now, why this is important. If you are going to make enough money where you're going to owe an additional $1,000 in taxes that's not being withheld from paychecks, you have to make estimated tax payments. So look at it like this. If you are working for an employer, you're basically being taken care of by that employer. They do your withdrawals for you and basically send off your money in whatever periodic frequency they have to the federal government for your federal as well as your state withholding, and of course the ubiquitous Social Security and Medicare taxes. So that's being taken care of for you with every single pay event. If you're working for yourself, you've got to take care of that for yourself. But the good news is you don't have to do it every single pay event. As a matter of fact, how are you going to do that? You get paid constantly, and of course, you have ongoing costs as well. So you have quarterly periods called the estimated tax payment deadlines. So let's get into this a little bit. And we were talking about what every doctor needs to know. So basically, you doctors break into three income classes for me. The first are doctors that work for someone else, hospitals, group practices, your basic wage earners. We were talking about the Form W-2 that is provided to you by January 31st, right before tax season every year. Excuse me here. And this will show the amount of taxable income that you have, the federal and state withholding, if you're in a state that has tax, and 41 of them do. And that's all reported on there for you. And then you basically just plug the numbers into accounting software, and it's pretty simple. But the thing you want to remember is to make sure that you are withholding enough. If you're doing withholding correctly, then you should never have to worry about it. The new W-4 form, somebody got the idea a couple of years after tax reform. I think 2020 was the first year, actually, that they came out with a new W-4 form. It doesn't have exemptions on it anymore because we're not allowed to take exemptions on 1040s anymore. They did away with that back in 2018. But there's a checkbox for two jobs, as well as other boxes for additional or adjustments to withholdings. It's important to fill this form out correctly. And the URL that I've put down here at the bottom, that's also going to be on the W-4. That thing is really handy to use, especially if you're married filing joint and your spouse has income as well. You want to plug in all of those different factors. So make sure you're withholding the right amount. The ideal amount is, I like to think within $500, but $1,000 I can live with because the $1,000 is the IRS's parameter. If you have more than $1,000 in tax and you weren't withholding properly, you're actually subject to underpayment penalties. And that's what we'll start getting into with the next slide here. A lot of you doctors are working for somebody else, but you also do work on your own. And there are a lot of scenarios, too numerous to mention, really, but you're going to possibly have some income that's reported to you on Form 1099-NEC, or maybe even -MISC, but NEC is the most common one, which is non-employee compensation is what that stands for. You're now in the world of entrepreneurs to a certain extent, and that $1,000 adds up fast. Basically, if you make over $20,000, for example, or maybe even less, on money on the side that is not reported to your W-2, you need to really give some serious thought to estimated tax payments. And the first one is the same as the 1040 tax deadline that everybody famously knows, which is April 15th. So that's why my practice is focused on doing good estimated tax payment advisories for our clients. Now, there's a way to do this, and I'll get into that in a second. But and like we say here, and I just mentioned, you've only got 4 of these events a year. But the IRS, if you actually bother to um, Google this and look at the code, they believe they're a pay-as-you-go system. But the pay-as-you-go is only 4 times a year, and it is manageable. So what you want to do is just basically account for that by figuring out how much money you estimate making for the entire year, and then divide backwards and make a good estimated tax payment. Oh, and one other thing down here. People ask me about this all the time. Says, "Well, I'm making this extra money. I can just go into my HR and increase my withholding." You can do that, but the thing is that can become a little bit unmanageable, and it's not a really good division of your labors, so to speak. Um, you should basically do your wage withholding based on your wage income and keep your other income separate. Um, Reason for that's fairly simple. But in my mind, if you are, well, how do I put this here? Um, let's say that 1099 money that you have coming in dries up for some reason, or you have another quarter where all of a sudden you're just absolutely overwhelmed. Whatever it is you're doing for your, licensed side hustle suddenly blows up in excess money. Your wage withholding isn't going to cover that easily, and you're going to find yourself doing multiple W-4s. Now, you're allowed to do as many of those as you like. Don't let your HR tell you you can only do so many, or that you're not allowed to do them more than once a month. That's BS, honestly. You can adjust your W-4 anytime you like. They're just trying to create less work for themselves. But at the same time, you don't want to continuously do that, because then you kind of lose track of your own accounting. So, and by the way, getting back on that other slide, when you are doing your W-4 and ensuring that you're withholding properly, look at your pay stubs at the very minimum quarterly. Okay. So now let's get into the meat of this, entrepreneurs. My third and final class of doctors are the private practitioners, my physician entrepreneurs. These are the people that I work for, basically doing business advisory and fractional CFO services. You are in business. You're the employer, and actually probably have salary and wages expenses of your own, as well as your other direct and indirect costs of providing services to your patients. So you are most definitely in estimated tax payment category for certain. So your tax planning is essential, as it says here. And I like that $500 target. I kind of do the dartboard allegory. If you have a tax return where you either have a refund of less than 500 or you owe less than 500 to the federal government and your state, you basically hit the red part of the bullseye, right dead in the center. You do not want to over withhold or overestimate taxes. If you, for example, and I say this countless times, but it's super important. If you find yourself getting a $3,000 refund after filing your taxes, that feels really good. It sounds like bonus money, but the thing is, you just gave the United States Treasury a $3,000 interest-free loan by allowing them to hold your money. You lost your your interest earning, as well as your spending potential of that money. It belongs to you, not them. And so that's why I think tax planning is super important. You want to get within that certain sweet spot, and I like $500. So I've written down some simple steps here. We actually do this for all of our clients that we work for. We'll take your our profit and loss statements, as well as all of your other income scenarios in your life. Like I say, a lot of you are married, have a spouse that also works. You may do other things. Maybe you're an author and you have money coming in that way. So what you want to do is project your annual taxable income. Okay. And that includes all sources of income. Multiply that out by the number of months. So it's April. So right now, of course, that would be the 3 month. And you would multiply that by 4. If you're interested in the math, it's reciprocal, basically. So it would be, 1 over 4. So multiply by 4. The 5, I believe that's 2.4, actually, or 5/12. And then the 8, of course, is just 1.5. And you do have an estimated tax payment deadline on January 15th of the year following your calendar year. And that is your golden opportunity to make the best possible estimated payment. But you want to do a really good job on these on all 4. We call it annualizing. You want to basically estimate your taxes based on the performance of the quarter you actually just had. I know you're going to see your tax software is going to say, well, you paid $8,000 in tax last year. So here are 4 vouchers for $2,000 per quarter. But that doesn't take into account fluctuations in either revenue or costs. So now if you've got a nice, solid, steady practice and you've always got the same patients, great, you can do that. But how many people can say that? I would say you're in the minority. So project your annual taxable income based on the number of elapsed months. Calculate the anticipated tax of that, and then divide that by the fraction to get a tax number. Make sure if you're doing June, September, or January that you, of course, subtract the payments that you've already made earlier in the year, and then round that number to the nearest $100, send it in. And the deadlines are on the 15th of the month of April, June, September, and January. I know these are offset. It's our opinion that we believe it's because of the federal fiscal year, which, believe it or not, actually ends on September 30th, not the calendar. I know you've doubtless heard things about the budget and extending it past December 31st and everything, but they are already doing a continuing budget resolution if they're still arguing over the budget in December. The fiscal year actually begins October 1st in our fine country, and I think that's why there is a estimated tax payment September 15th. This is our opinion, but it's kind of based on numbers, so I feel like it's pretty safe. Bottom line, what you need to know about estimated tax payments. If you're going to owe more than $1,000 in tax when you file your income tax return next year, you have to make estimated tax payments. They don't haul you off in chains or hit you with a cattle prod or smack you with a whip. What they do is they hurt you later in your wallet. It's called underpayment penalties. And in fact, a lot of tax preparation softwares will actually calculate that for you. If you owe quite a bit more than $1,000, don't pay them $1 more than you absolutely have to. That is the concluding thought that I want to leave with everybody. Never pay the Internal Revenue Service a single dollar more than they're actually entitled to. Why do that? Are you a fan of the way they spend the money? I'm not. So let's not do that, okay? So if you have any questions about any of this, please let us know. We're coming to you on 3 different media here. We're on YouTube now, as well as LinkedIn and, of course, Facebook. And all 3 of those have some kind of a comments mechanism in them. Just write something like help or more information, or just send me an email, Eric with a C at owingsllc.com. And let's talk. And we can share with you how we do what we do for the clients that we already have, and basically plan your taxes in advance, as well as quite a bit more in terms of your overall accounting and business advisory. Why settle for accounting that basically tells you what's already happened in the past when you can have the kind of advice that helps you to make decisions in the future? So with that, hope you're having an amazing spring so far. Yes, that's right. Easter's coming in a couple of weeks. April has just turned the calendar, and hopefully you're in a part of the world where things are starting to wake up outside. The trees are blooming and the flowers are coming up, and the second quarter begins as of yesterday. So let's all have an amazing second quarter, and going into summer, have an awesome day today. And if you do have a chance, do something randomly kind for a stranger today. So with that, that's this week's edition of Weekly Profit Talk, and we will see you next week, 8:30 Mountain Time. So long and have an amazing day.